Okay, let's start. Welcome, Maria Luisa, Chochi. I don't know how you want me to call you, but
Always Chochi.
Always Chochi. It's a pleasure to having you here. We've been talking about fintech and open source a lot, and now it is time to hear what is fintech and why fintech is so important. Chochi or Maria Luisa has been involved in fintechs for a few years now. She has a background in laws, and now she's in technology, so it's a very interesting combination and very needed in the fintech space because it's, as you know, it's a very regulated space. It's a place where a lot of things can be done with technology, and so please, I will be a fly on the wall and we hear your presentation. Thank you for being with us, Chichi, and good luck.
Thank you. Well, good afternoon, everybody, and thank you, Javier, for that introduction. Javier and I go a long way back since, thanks to him, I actually started in this business. So I am very honored to be part of ApacheCon. It's my first time, so it is such an honor for me and also for Quell, my company. So as Javier was saying, I'm going to talk about fintech and why for me is the most disruptive technology of the century. And probably this is going to be a session that is not going to be like the ones that you've been hearing before, since I don't have a much technical background. You're not going to listen to me talking too much about, hard technology, but more of business point of view around this. So I just wanted to start by saying that we have to bear in mind that there's only one future that I think that we all should be interested in, and I'm definitely interested in, and it's one where financial services meaningfully improve people's lives. In this talk, we'll go on a journey together to explore this future, and I want to share with you a path from where we are today to a world where your ideas are realized and improve the lives of the people you serve. So let's get started. So if you are here, probably you have some clue about what fintech is, but I'm going to give you some notes on that. And probably you know that financial technology, or fintech, is used to describe new tech that seeks to improve and automate the delivery and use of financial services. At its core, fintech is utilized to help companies, business owners, and consumers better manage their financial operations, processes, and lives by utilizing specialized software and algorithms that are used on computer and smartphones. When fintech as we know it emerged in the 21st century, the term was initially applied to the technology employed at the back-end systems of established financial institutions. Since then, however, there has been a shift to more consumer-oriented services and therefore a more consumer-oriented definition. Fintech now includes different sectors and industries such as education, retail banking, fundraising and nonprofit, and investment and management to name a few. So sorry, it's just that being with the two screens is a little bit complicated. So as I was saying, fintech as we know it emerged in the early stages of the 21st century. But what is very interesting is that actually fintech, without that name, started around 70 years ago. And what is striking is that about the last 70 years of development in these technologies is that while they became mainstream and widely used by banks and their customers, the banking sector wasn't threatened at all. On the contrary, during these stages, banks grew. The most talked about and most funded fintech startups share the same characteristic. They are designed to be a threat to a threat to and challenge and eventually usurp entrenched traditional financial services providers by being more nimble, serving an underserved segment or providing faster and or better services. So fintech is different than many other startup sectors because the financial world is heavily regulated and mostly consists of a relatively few number of large, well-established firms. If one word can describe how many fintech innovations have affected traditional trading, banking, financial advice, and products, it's this disruption. Like financial products and services that were once the realm of branches, salesmen, and desktops moved toward mobile devices or simply democratized away from large entrenched institutions. And here's the key to everything. Technology and innovation applied to finance with financial inclusion as its mission and vision took millions out of poverty, giving them access not only to financial services, but also to education, safety, and equality. Being able to have access to a transaction account is a first step toward broader financial inclusion, since a transaction account allows people to store money and send and receive payments. A transaction account serves as a gateway to other financial services, which is why ensuring that people worldwide can have access to a transaction account is most important. As business and technology innovators, we have not only the opportunity, but the responsibility to create and deliver solutions to whom need it the most. So where are we standing with all of this? Back in the early 80s, Nobel laureate Mohamed Yunus was the pioneer in creating a new mindset and business culture within the banking and financial industry. Financial inclusion and social businesses towards a world of zero poverty by 2030. So let's see how this has developed. First, we find microfinance. And here is where all started. Professor Yunus founded the Grameen Bank on the principle that loans are better than charity to interrupt poverty. They offer people the opportunity to take initiatives in business or agriculture which provide earnings and enable them to pay off the debt. The bank is founded on the belief that people have endless potential and unleashing their creativity and initiative helps them end poverty. Grameen has offered credit to classes of people formerly underserved, the poor, women, illiterate, and unemployed people. Access to credit is based on reasonable terms, such as the group lending system and weekly installment payments, with reasonably long term of loans, enabling the poor to build on their existing skills to earn better income in each cycle of loans. Given the opportunity and access, the impact and results on people's lives is radical, but credit is not merely enough. So there comes financial inclusion. And if we talk about inclusion for the unserved and the unserved, microcredit, again, is not nearly enough. The World Bank had defined financial inclusion as the means that individuals and businesses have access to useful and affordable financial products and services that meet their needs. Transactions, payments, savings, credit, and insurance, delivered in a responsible, ethical, and sustainable way. And then now we have this main goal of no poverty by 2030. Technology has made us jump light years in terms of well-being, human capacity and knowledge, equality and social inclusion. The change has been so big, so profound, and so fast that not everybody has been able to experience it. And not every industry could be adaptable and innovative enough to survive this change. The 2030 Agenda for Sustainable Development, adopted by all United Nations member states in 2015, provides a shared blueprint for peace and prosperity for people and the planet, now and into the future. At its heart are the 17 Sustainable Development Goals, which are an urgent call for action by all countries, developed and developing in a global partnership. They recognize that ending poverty and other deprivations must go hand in hand with the strategies that improve health and education, reduce inequality, and spur economic growth, all while tackling climate change and working to preserve our oceans and forests. The power of technology used for good and all the benefits it can provide has not only changed our ways of living, but also our ways of thinking, bringing financial inclusion, a key pillar in social inclusion, to unimaginable heights thanks to mobile and digital. Financial inclusion is a key enabler to reducing poverty and boosting prosperity. So I am sure that right now you're wondering, okay, so where is she going with all of this? So all of this, I believe, that set up the stage to understand exactly what it is, that responsibility that I was talking about before, and what we can do as business innovators and as technology innovators. And right now, since we are here in ApacheCon and knowing how important it is, the Apache Foundation is actually wondering, okay, so what can I do with all of this? So let's take a look at this. If we see fintech, and actually this is from the Business Insider Global Fintech Ecosystem for 2020, we can see that fintech, it is a mess, or at least it's difficult to understand. It's a crowded landscape focused almost entirely on upper income people in upper income countries. For newcomers, it's hard to differentiate and establish a foothold. Even worse, with a focus in the United States and in their European markets, it's not even a level playing field for innovators. In these markets, the customer accounts are controlled by the big banks. The payment networks are controlled by the big banks, and the regulators are more or less controlled by the big banks too. Fintech has been so busy chasing unicorns that we have missed the market right in front of us, the real impact. And that doesn't seem like a very compelling future. But I am very optimistic. So let me tell you that actually there is a very compelling future, and the McKinsey Global Institute has actually measured it. There are $11 trillion of financial activity untapped banks or fintech, consisting in a consumer market base of 3 to 4 billion people. So what is going on with this market? Why is nobody tackling this market, and where is this market? This market is actually in the developed economies. Technology has created new opportunities for digital financial services to accelerate and enhance financial inclusion. Digital finance is increasing financial inclusion and is associated with higher GDP growth. The revolution in financial services delivery is well underway. We are arriving in a new era, moving from a time where people almost universally dislike the inconvenience, cost, and slowness of financial services to a time where these are as easy, low cost, and fast to use as apps or smartphones. Financial institutions and services providers can finally participate in an efficient and cost-effective manner. We can put the preferences and needs of our customers into better focus, while growing the market to include people who depend on and need more affordable transactions. And this market is global. More than half the adults in the world are waiting for fintech solutions. So, what is it going to take? Facing a changed world and radically new market dynamics created by the internet and the digital transformation of economies, transactions, mobile access, and of money itself, every new and surviving financial services business is looking for strategies to adapt, connect, and grow. All world assets, such as locked-in customer base, financial resources enclosed by fortress-like walls of high transactions costs, and a molasses-slow timeline of service improvements, have become liabilities. Fintech startups, financial institutions, and markets teeming with old and new customers alike are all in this disconcerting situation together. As a result, most banks and credit unions, especially small and medium financial organizations, require assistance in the transition from the legacy system to future technology solutions. What we need is a highly efficient way of transacting. Creating efficiencies is important, but alone is inadequate and leads only to the incremental innovations like ATM machines and addresses only a small part of our challenge. We need a highly efficient way of transacting and a fast, easy network with clear and standard ways for those transactions to work at much lower cost so they can scale and be offered to more people. Service providers and institutions can design products based on standards that improve efficiencies and offer services and innovative products at a lower cost to customers while making better profits. The real purpose of open source is to develop standards that drive the delivery of services at a massive scale. Software companies, industry groups, and regulators collaborate on open source projects to develop and enhance these global standards. As you may know, the most important global software standards are governed by guess who? Yeah, the Apache Software Foundation and the Linux Foundation, who provide fair and neutral governance. We have to embrace what's out there. Nobody builds anything from the ground up anymore. Instead, you manically, obsessively, passionately focus on your value to add your customers and on getting to market first. By only building what we need only when we need it. And you do that by leveraging the value add and the services of others who are passionately focused on you as their customer. You have to understand that once you enter the fintech world, it's just not another software project. It's just not looking for the next unicorn. You have to understand the responsibility that we all have, and we need to create this add value, this social impact, the real innovation, now more than ever. So imagine this. Somewhere remote in a low-income country, in the early hours of the morning, a woman wakes up and dials her cell phone. She's borrowing a very small amount of money digitally to buy some vegetables in the local market. During the day, she will sell her inventory in her shop located in the outskirts of the town. Some customers will pay her using their mobile wallet, others with cash. She will transfer the cash onto her phone at the shop next door, where the merchant is also a mobile money agent. At the end of the day, she will be able to pay back her loan and keep her profit in her mobile wallet. She can use this mobile money to pay for the gas she uses to cook dinner, as the utility company has recently connected its payment systems to the mobile money infrastructure. In her daily life, this is huge progress. And technology like the one that is curated by the Apache Software Foundation and Fintech itself is what actually has brought this huge impact. Thank you.
Hey, Luisa, thank you for your presentation. I don't know if there is any question from the audience, if anyone wants to ask any questions. If not, I would like to ask you one thing about the fintech, and is what do you think that fintech it's been so powerful in the last years, and what are the trends that are you seeing in the fintech space today or these days?
I think that the main fintechs, well, first of all, to answer that question again, in my every day when I'm work or when I am in the field, what I'm always seeing is how fintech is making a social impact. So in these kind of spaces where we work, you're not going to find AI or machine learning or technology like that or cryptocurrency. You're going to find new innovations and actually ways to maybe solve problems, the same old problems, but with new methodologies or with new techniques. So the main trends on that space that I am seeing is providing with more transactional accounts to people, especially to the underserved people, because we have to make a difference between the people that is unserved and the people that is underserved. Generally, in the emerging economies, we can find that we have a very large percentage of people that is served by banks or by any financial institution. But then we see that these people are not using their accounts for many reasons. If it is because it is too costly, because it is too difficult, because they don't have the connectivity, or basically because they just don't know how to manage that. So all of that people that it seems that they are actually included, actually they are not, and they are underserved. So one of the main trends that I am seeing out there is all these technologies or all these startups that are trying to serve that people that it is underserved, especially by providing with transactional accounts, to make sure that when people have an account in any financial co-op, or if they have, especially when they have in a financial co-op, or even if they're receiving money from the government as Social Security or something like that, that they actually know how to use that instrument and that they can do transactions with that account. I think that that is the main trend that we have right now.
So you're not focusing on just big innovations and new technology wave. It's just allowing the unbanked to do things that the first world and the people that is included normally do, and they are not so normal for the people that is like living with $2 a day.
Exactly, and that's where the most people that is unserved or underserved is. So like, for example, I'm sure that everybody that is in this session, and even if I go and grab my wallet, like how many cards do we have, especially here in Uruguay, that basically you go to the supermarket and you get a debit card from any bank, or and all those cards are international debit cards. So therefore you can link that to any wallet. So mobile wallet, maybe I have 5-6 different accounts for mobile wallet. And of course, because of my background and where I live and for what I do for a living, actually, I know how to use all of that. But then you go to these emerging economies that of course are nothing like Uruguay, like you go to Southeast Asia or you go to Central Africa and also to many parts of Latin America. And you find all these people that they might have an account, but they just don't know how to use it, or that maybe they don't even know that they have the chance or the opportunity to open an account everywhere. So I think that we really need to make the difference between what is going on and what is disruptive in an emerging economy region versus what happens in a developed country. Because the innovations that people who live under our more or less similar conditions or in our privileges, what we want is like, I don't know, that only by thinking I can get my things paid. And that is something that is disruptive for us and that we can use. But actually what people in the other regions of the world who really need a transactional account need is actually transact, is to be secure, is to learn how to run their domestic finances, is how to save, how to invest, even get credit records, because many of these people, maybe they have informal jobs and they are very good payers, but they just don't have a credit record. So they will never get a loan, or they will never even be able to open an account on any financial institution. So I think that it's very different what we can see from the US and Europe and other countries in the world versus what we can see in emerging economies. So I really think that if we are working towards financial inclusion, and if we are working in emerging economies, before we start thinking what will be the next wheel in fintech, we need to understand what the customers need and how we can help them so they can have a better life.
Absolutely, absolutely. And you mentioned, and I know that you have a lot of experience with cooperatives and credit unions. How are they adopting new technologies, and what are the difficulties for this space to adopt fintech and new emerging technologies?
That is a very, very interesting question. And what is even more interesting is that I think that financial co-ops, and when I mean financial co-ops, I mean almost any financial institution that is not a bank or a retail bank, that they have many names all around the world. So what is very interesting about these financial institutions, and more or less they all think alike, or they are very similar. So basically, first and foremost, their business is very bank-alike. So what they do is sell and buy money, basically. But the thing is that they are running that business for people that is not only wanting to buy or sell their money, they need more because, well, we know that people have different needs in different regions of the world. So the first thing that happens is that there's this huge tsunami of regulations and new technologies, as we all know, all around the world. And these financial institutions, who maybe 5 years ago or even less weren't regulated, now they are regulated. So now they just cannot run their entire business in an Excel spreadsheet, if you're lucky to find one of those, or even run it by paper. They will need to have a core banking system, and they will need to have that core banking system that is able to have reports, and those reports need to go to their central banks or any regulator. And even though at the very surface, these financial institutions understand that they need that kind of technology, which for us, maybe it is like completely basic, having a core banking system. At the surface, they really understand that they need that. But then on our side, and I think that I have discovered this thanks to all my years in Quelab, is that at first, we believed actually that it was just a matter of providing for the technology. And if we give you the technology in a sustainable way, then that's it. You will have your system, and then you can improve your business and your member base, and you can have like all these new technologies and stuff. But then you realize that that is not the right way. You actually need to help these financial institutions to get or to go through a digital transformation process. Because most of the times, again, you will find maybe a financial institution who has a legacy system, who has a core banking system from the 90s, or maybe the early 2000s. But that is if you're very lucky. But if you're not that lucky, you're actually go to the real field and working with the real people who need it, they'll be running their entire operations in an Excel spreadsheet. Again, if you're lucky. Otherwise, they'll be doing it just by paper. So you need to take that people from that mindset of being paper-based to move to a digital-based system. And that means that you need to change their entire business. Because again, these financial institutions their entire business is based on paper. And now you're taking them digitally. So it's just not having an app. It's just not having a platform or a core banking system that enables them with other technologies and to other solutions. You really need to change the mindset. And that's where I think that our responsibility as business innovators and technological innovators lies. Is that, oh, sorry, it's the bell and my dogs are going to go mental. So what we need to understand there is that our role there is not just bringing the technology or delivering the technology. We really need to grab these people by their hand and help them walk through this process, because otherwise we are not going to be successful. And you can spend millions of dollars and you can spend years and years trying them to use a technology that they are not ready for. Because again, we are talking about financial institutions, not just people. Probably if you go to the field and you go even to a rural area and you provide directly to the consumer, to that final user, a technological solution, probably they will use it faster than a financial institution. But a financial institution is a completely different thing, and you really need to be aware of that before you get to work with them.
But why do you, and this is an open question, and I don't have the answer, it's where will you invest your resources and your time is in trying to convince people that they need to come and digitize their process and procedures and business, like convince all old school guys to come to the new world, or you support the new fintechs in order that because they don't need to. So on one hand, you have the old school guys who has their clients and the customers, and on the other hand, you have the fintechs that they have the technology but they don't have the customers. So sometimes they are going to meet in the middle. Some fintechs are going to get more customers and gain traction, and some cooperatives and trade unions will die in the middle. So where are you putting your energy today? And on if this is a trade-off, or this is something that can be forever, or someone is going to win or no?
Well, that is a very interesting question, and that is something that I think that all of us have been thinking for many years now. And again, of course, I don't have the right answer, maybe, but what I do believe is that we are kind of living like in parallel worlds when you are in the fintech industry. So you have like all the technology, you know that this is the best thing for financial institutions or for the end consumer. But of course, they are not going to believe that, or it's going to be very, very difficult for them to understand. So that is the world that the fintechs are living. And then we have the other world, which is the real world, or, well, not the real world, maybe the matrix. And we are the real world. So in this matrix-like world, what happens is that is actually the reality that you have to face. And the financial industry is not going to go away from night to day. I mean, in 1994, I think it was, Bill Gates said that banking is necessary, but banks are not. And it's been almost, oh my God, almost 30 years, 25 almost, since he said that, and we are still have banks. And probably we are still going to have banks. What I think that we need to meet in the middle is that banks are not necessary, but the other kind of financial institutions, I think they are. And if we want to keep them alive as fintechs, we need to help them. And why do we want to keep them alive? I think that we want to keep them alive, again, because of their social impact. And I think that is another thing that we need to ask ourselves if that is what we really want. So do we want the next unicorn, or do we actually want to change the world? Do we want to actually make an impact to everything that we do? That we wake up one day and we say, okay, this was worth it because I really make a change. So I think that the real change is right there with these financial institutions who are caring for their communities, who are actually helping women in rural areas, who are helping kids to get educated, who are trying to people not work informally, but actually have a formal job. So I think that, banks probably will stop existing at some point. I don't think it's going to be anywhere soon. And I think that fintechs alone just cannot make it, because fintech people are not bankers. We all know that. And we don't get along with regulators, and we don't understand regulators, and we don't understand why things have to be so slow, and why we cannot try things. And if it doesn't work, then we build something else. We are a completely different kind of people. So, but there's a reality principle, I think, that we need to follow and understand that we just cannot, at least for now, like throw everything and build something from scratch. I mean, that will be the best thing, I think. But this is the reality that we are facing. And especially living in the world that we are living right now, in the middle of a pandemic, and with all the things that are happening politically everywhere, I think that now more than ever, not only as business innovators and technological innovators, but also as leaders in the fintech world, we need to take a stand and say, okay, are we going to really make an impact? And if we are going to make an impact, we need to decide to whom we are going to create that impact. If it is for the people who already have all the privileges that they can have, or if we are actually going to do something and help these institutions who are working with communities that are not that privileged.
Yeah, right. Thank you, Chochi, for your presentation and your thoughts. It was very insightful.